Today I'm going to tell you about the trading sessions and their secrets that will allow you to understand price action better and get better results from the markets. Alright, so the first one is that trading sessions are actually liquidity. So you might all be trading liquidity and you might be looking at trend lines, support resistance, whatever. Previous daily highs, previous daily lows, that's all good. But there are also trading sessions. You may know the Asia liquidity session strategy, where you in London wait for Asia highs to get taken and you short, or you wait for Asia lows to get taken and you buy. But it goes even deeper than that. So if you look here, you have the perfect example on to buy and short, all right? But New York also likes to take liquidity. So London likes to take Asia and New York likes to sweep London lows and highs. So in this indicator, this is my indicator by the way, you can't actually get it. Only my mentorship private students get it because it actually needs a script. But if you want the free stuff, you can also go to our group, join free, link in the description, and you can get my vision. But for the indicator, you'd actually have to join my mentorship that I actually give a script for, and this is like 20 indicators in one. But the important thing is just to have the sessions and the kill zones here. Sorry. But you can see Asia is yellow, London's blue, New York's orange, right? And so here you can see how we gave out a smart money trap, and then we took out London lows and we ran. And as soon as we take out Frankfurt highs or London highs, we also ran to the other way. Here, took Asia, run a bit, took London, ran. Are you noticing that the highs and lows of each session are also the highs and lows that took liquidity from previous session? Right? We can go even further. I'm going off recent time action, but I could show you anything. Here is just we have a continuation, but as you can see, the low that took liquidity of London was the low that gave you some movement after that. This is a shitty day though, but hey, as soon as we take London, as soon as you take Asia, some movement. As soon as you take London, some movement. And that's how you want to be trading. All right, sessions, highs and lows are also liquidity. Another thing that we can look at is that Frankfurt, and it's a underrated session. So Frankfurt is the hour before London and starts here. And Frankfurt might take liquidity or might build liquidity for London. Let me explain. In this case, we just took out liquidity and became the high of the day. Now a lot of people might look at it as the inducement of the day and it will be a continuation for all of the day, which is logic, but most of the times it's you get to 9:30, the first 30 minutes of London, and London will just run Frankfurt. In this case, you have it here. Opening of London, boom, taking Asia session. And yeah, Frankfurt didn't do much here, and here it started dropping as soon as it wake up, as soon as it opened. I ain't got much examples here, I think, but yeah, here made a high and then continue lower, and then as soon as London came, it came to take these highs. It's not so good though. In here, Frankfurt actually made the low of the day, and then price just continued for the rest. This was the inducement of the day. But in here, for example, it was actually a trap. This wasn't even Frankfurt, but it built off liquidity as it made like break liquidity here, this red line, then continue lower. It was a trap, became a trap for London Open. And that brings me to my next point, which is the London manipulation timing. So London manipulation timing is what I was talking about the first 30 minutes of London session. This is horrible. but the first 30 minutes of London are a trap. All right? You always want to wait for those first 30 minutes, because those first 30 minutes, you see how the kill zone opens here? Boom. Took some liquidity. Then you can look for it. Here, kill zone open, the top of the 930 on the manipulation. Here, you can play safe. Yeah, you already got the London Open. Because the London Open, it's going to give you that movement that's going to liquidate Asia high. It's going to go crazy. So you might just avoid it. Wait for the first 30 minutes to go. And then you can have your movement. Here, you can see as London Open, it went crazy. And then 930 is already chilled out. And you can ride the movement along. Again, I'm trying to go based off recent price action. But yeah, 930 you got the low of London, and then it went off. Here, some liquidity get taken, some mitigation, and then you got the move. This is one of my rules. I always wait for 930. Here, yeah, I always wait for at least 930 to start trading. Right? I don't trade Frankfurt. I don't trade the first 30 minutes of London Open, because it's usually a trap, manipulation. It's gonna go crazy. Just avoid it. And that brings me to the next trap, which is the New York lunch, which is not New York lunch, the New York trap timing, sorry. New York trap timing, otherwise known as lunch for European people, right? So you have my color boxes of sessions, and you notice this pink one, which I addressed in the previous video. We were looking at GU. This lunch box, it's the hour. Okay, so it's the hour after London session and before New York session. So if you're in UTC +1 Central Europe time, it will be from 12 to 1. And this session, it's just when the people in London go on their lunch break, and people from New York start waking up, and it just delivers a whole lot of manipulation trapping. You can see how here it took the London lows. You can see here it didn't do much. Here it took out the London lows. Here it was testing just this, but it's usually manipulation. And most of the times, what you'll see, it's like kind of like this testing, but then New York comes and just takes out the liquidity. It gives you, either it takes you out of your position with liquidity, or it builds kind of momentum and traps for you to place yourself in it, and then just runs it. For example, you can have at the end of the London some liquidity get taken, all right, and this just runs it, or it gives you some confidence, some hope for then New York to take it. All right, I ain't got many examples in here, but trust me and look at this backtest and you'll see. Here it actually worked, but major liquidity around here. You don't want to risk it. Here, it's making me look bad, but I trust you guys. Like here, you have London, boom, and then New York comes in again. Here, you have London testing this. People that might not trade Asia, here it comes to take them out. All right, I don't have a script, guys. I just got the knowledge. I go with the flow, recent price action, and I explain to you guys the things. All right, and finally, we can go to the London close. So the London close, it's an important session. It's where London ends in a day, all right? Not the morning one, but here, after this New York kind of open, and it gives you the retracement of the day. Now, there's a lot of tricks. One thing you can do, it's if London is bullish and New York is also bullish, what you can expect is for London close to be a retracement of both, and so bearish. And if we say London bearish, New York bearish, then London close will most likely be bullish. This is most likely. This is having an edge, having a confluence, having an edge on your side is where you become profitable. It's not sure 100% it's gonna do it, but it's just a confluence, bro. Like here, have mitigation and you have price falling. Here, you have the kill zone, this pink thing. This is London kill zone, New York kill zone, and London close kill zone. And you have it here on the moment where it retraces the whole day. It can have this retracement of the day, or you can have something as here, London bearish, New York bullish, and so London close will look to make efficiency with London. So in here, it was far from London and it came to make efficiency. It actually came to broke it, but you can search for that. When the London session of London and New York aren't the same. Like here, London bearish, New York bullish, and it came to retrace. In here, it's not a good example. In here, you have the same. I mean, New York was kind of bearish, but yeah, you can see how it retraces throughout the day, because London was super bullish in this case. Here, perfect example. London bullish, New York bullish, London close bearish, retracement of the day. Here, London bullish, bearish, and then London close. It's bullish, but then it comes through the trace to make a key level with London, make efficiency with right here, and then it goes up. In here, okay, nothing much. But take these examples, watch the video again if you need to, go to the backtesting and apply these, or the live market. Look for it. Really take advantage of the tips I'm giving you, because nobody gives you for free, either because they don't know it or they make you pay 2K for it. Either way, I'm just one of the few that gives you the stuff for free. I hope you like it. I hope you take advantage of it. Just don't be a crying ass motherfucker that doesn't take action, and just ask for prop firms challenge in my DMs. Alright, take care and see you on the next one. Peace out, boys.